Good afternoon. This is Brian Van Drew, Premier Life and Annuities National Marketing Director, and with me I have Jason Rostad, Marketer for Life Division.
Hello, everyone. Thanks for taking a minute to join us.
Exactly. First and foremost, we want to thank you for taking the time to be with us today on our webinar, Capturing Higher Life Premiums. And the whole idea around this webinar was to show you some real value, some real opportunity out there in the life insurance marketplace that could help you capture higher premiums, make more commissions immediately. And these aren't our ideas. These are ideas that our producers are using on a daily basis. They come straight from our top producers for 2013. And we see some real value in it and believe that you should be able to walk away from this webinar capturing, like I said, higher premiums and more commissions.
That's exactly it. And what keeps the guy that's earning $40,000 to $60,000 a year to getting that $250,000 is understanding how to get these type of sales. And the clients aren't just going to come to you asking for this type of thing. Most of them don't even realize they have these kind of options available to you. So understanding this now will definitely help you increase that income.
Well, let's get to the first idea here, Jason. And that first idea is new versus old. And this is a great concept and a great conversation starter when you're talking to clients and you ask them, do you have life insurance? And the immediate response normally is, yes, I do, or I'm taken care of. And what you can respond to those type of answers is, great, do you have the new kind or the old kind? And what that question does is it's going to now start getting their mind to turn and say, nobody wants to have the old anything, as far as I know. So they're going to start asking you, well, what's the new kind? What's so different about the new kind? And the new kind actually gives clients opportunities to receive benefits while they're living, whether that be for terminal, chronic or critical illnesses. There's even income riders out there on the new kind of life insurance that create an income stream you can't outlive. As I say, on that slide, there's a new way of thinking, and it's not just on universal life policies, but it's also on term policies. And when you start looking at term policies, you look at the younger clients, the 20s, the 30s, the 40-year-olds, a lot of questions, there are a lot of things that you can pose to them, but one question that really makes sense when you're talking living benefits is, next 20, 30 years, what's more likely to happen? Are you more likely to pass away, or are you more likely to come down with a terminal, chronic, or critical illness? And that's where the new type of life insurance comes into play.
Another way to look at this is currently there's over 900 life insurance carriers in this business. And all of them have the same options available to everyone as far as death benefit and premium. Understanding the concepts of how you can keep yourself separated from the rest of that pack will keep you unique. So you're not just another guy talking about another company that's on a spreadsheet.
Well, Jason, why don't we take a look at a sample illustration and kind of show you the power of the new kind of benefits you can sell off of.
That's it. That's exactly it. And when we're looking at this proposal, this is a great example to use, mainly for this reason. It's a story to be told. So you can actually tell your story as far as how you can help that client all in one place. And most of the ideas that you're going to have, they're going to come straight from this. But as you look across the top of the screen at the different colored bubble, we're going to start with the same old-fashioned story that every agent's been able to tell since permanent life insurance came into play as far as the cash value accumulation, the life insurance, as well as that total solution. Now you see underneath that premium for about $232 a month. What we're going to add in, though, is extra value. So anything we talk about moving forward from this is going to be more reasons for your clients to do business with you. Now, in more particular, the accelerated benefits. We're going to move to the next slide and kind of dig into that a little deeper. As you can see here at the top, the first one we're going to talk about is terminal illness. Well, what that translates to your clients means that if you have been told by a doctor that you have 2 or more, 24 months or less to live, they're going to give you an accelerated amount out of your $250,000 death benefit of $215,000 and change. With that money, you can either fulfill your bucket list, go and see things you may not have had the money to see before, or pursue experimental treatment, things that you might not be able to do if you didn't have that kind of money. A lot of times, some of the things that can battle cancer and a lot of these diseases that we just can't beat may be able to be beaten in other countries. So that's something to think about there. Moving right down the list, chronic illness. This is an extreme hot button, and we're going to talk about this quite in depth. But when you see here, what this does is this breaks it down, and it shows your clients, even in younger years, as they start to age, they're going to have a pool of assets that will be able to actually be able to take care of these solutions. One thing that keeps this unique, too, is that this is a cash benefit that goes to your client, so they determine how that money's used. Moving right along, critical illness. This is something that's very unique. Not a lot of carriers have this, so this is definitely an arrow in your quiver that will keep you on the other side of saying the same old things over and over again. So basically, picture 7 dread disease-style Aflac-type policies built right into your death benefit. Your clients can trigger this based on the severity of the disease or the critical illness they have, and again, that's a cash benefit that goes to them. They decide how that money's used.
You know, and one thing I want to point out we didn't mention in this example, this was based on a 40-year-old female, so we were talking $232 a month for $250,000 in death benefit, and on top of that, you've got the cash value at 65 that we mentioned, and also you look at the living benefits that they have. It's an unbelievable story to tell, and it really is driving more and better benefits for the new style of life insurance compared to the old.
A lot of ways to squeeze every penny out of that dollar, that's for sure.
All right. Moving on, the next idea we're going to be talking about is life rescue. And this is a great idea for clients with underperforming ULs, being able to 1035 cash value and give them guaranteed death benefit with new and better benefits. And it's a great way to review a client's current policy. And a lot of times when you're asking clients about life insurance and trying to open up that conversation, like I said in the previous idea, they try to shut that conversation down right away by saying, "Oh, I'm all taken care of it." Another response to a client would be, that's great. A lot of life insurance sold in the last 20 years was interest sensitive, and we both know where interest rates have gone here recently. When's the last time you had your policy reviewed? It may be in jeopardy. And with a statement like that, you're going to get some interest. You're going to get some clients wanting to have that reviewed because the last comment there in that statement was, it may be in jeopardy. Well, senior clients, they don't understand their policies as well as they should be, so they want a second opinion.
That's exactly it.
That's perfect for someone like you to have that opportunity.
Clients, without having a trained eye, most of these clients have no idea what these ledgers mean. So until you sit down and explain to them what they're looking at, they're really kind of clueless. They get that annual statement every year. I think a lot of agents have even told that story of where there's been a shoebox full of unopened statements. Clients just didn't look at them. They really didn't know what they would translate it to. If you ever do get that situation where maybe they kick that a little bit, another thing to talk about is their goals may have changed. Beneficiaries may need to be updated. There's a lot of different reasons to review that policy, and keep in mind, a lot of times that's the pivotal point when you really start to build that relationship, when you start talking about things that will affect them regardless of that new sale.
Well, why don't we take a look at a sample case. We've got an example of a 64-year-old female, $50,000 UL policy, currently paying $218.50 per quarter. Now, she's got a statement in hand where the producer opened up the case where the statement said in the next 5 years the policy is going to lapse unless she starts paying an additional $100 a quarter. And the current cash value on that statement was $9,770. Now, this is an actual case. We quoted it 2 weeks ago. We sold the case with our #1 producer here at Premier. Actually sold this case. So, and I put there at the bottom of the slide, there's opportunity, because when you see cases like this, there's definite opportunity for some kind of sale. So let's take a look at, we've done 3 different options. So let's take a look at option 1. Option 1 is, let's take a 1035 of that cash value and let's give them the exact same death benefit, the $50,000. And when we put that into an illustration, we were able to 1035 that, giving the exact same death benefit value. But if you look in that top left-hand corner there, the quarterly premium is now $143.29. So we were able to save them just about $83 a quarter compared to where they were sitting at before. We also were able to guarantee that death benefit in this example, and I cut off the illustration, but in this example, it's guaranteed all the way up to age 120. So we were able to guarantee the death benefit to 120 and lower the premium. Client's got to be pretty ecstatic about that. So let's take a look at option 2. In this option, we said, hey, why don't we 1035 that money? Let's allow the client to continue to pay the same premiums they're currently paying, and let's see how much death benefit we can drive. And in this example, we were able to capture over $12,700 more death benefit. So it went from $50,000 all the way up to $62,733. Once again, we guaranteed that death benefit all the way out to 120. Kept the same premium, don't have to pay that additional $100 that she was looking at in her old policy. And then one thing I forgot to mention on the last slide that pertains to this slide as well is now she's got more and better benefits because of the new style life insurance versus the old. There's one more option that we can take a look at in that situation, and that's saying, okay, well, the client told us that situation has changed, that death benefit no longer needs to be $50,000. We offer her a paid-up policy, 1035 all the money over, and give her a guaranteed death benefit in this situation of $25,747, and she's got no more premium payments. Death benefit is guaranteed to, once again, 120, and we've opened up some dollars in her her monthly expenses to maybe capture additional sale, maybe increase her lifestyle, but we've certainly taken that burden off her as far as worrying about a policy that may lapse. You got anything to add, Jason?
That's perfect, and the key word here is flexibility, because as your clients go, and a lot of you in the listening crowd today, pay close attention to this client's age. She's 64. As we know, when she turns 65, she may be looking at some changes in her healthcare situation. You may need to find some premium in her life to where now you can help where she's jumping off maybe a group plan, going into paying for her own Medicare supplement, whatever that case may be. Here's one way that you can find that premium. So whether it be she's looking at more leverage, wanting to get the absolute most to her kids, or if she needs to free up some funds, you have options.
All about giving the client some flexibility and the new plan that we're offering. So
exactly it.
Let's take a look at the next sales idea, and that's investing into the family. And before I get into some of the bullet points there, when you start thinking about perfect investments and things like that, it's always about trying to match certain goals. And before I even get a little further into that, I just want to touch on you've got senior clients. And a lot of times you're approaching them about annuities, life insurance, all these senior type products. But what we fail to forget is a lot of times we've got an opportunity with their children. And in this situation, we're using life insurance as the investment vehicle. And the reason why we use life insurance is if you look on these bullet points, use the least amount of money to create the greatest amount of wealth. Guarantee the wealth will occur and the legacy will transfer tax-free. Create multiples of wealth immediately. Leverage and control the asset. When you look at a perfect investment vehicle, they should match all these bullet points. Life insurance does. And unfortunately, with traditional thinking, you think of investing in the stock market, real estate, qualified plans such as IRAs, Roth IRAs, traditional 401ks, things like that, bank saving vehicles, CDs, savings accounts. The thing about these vehicles is they don't match every single one of those goals that I mentioned in the previous slide. So really being able to talk about life insurance on a parent as an investment vehicle for the children will separate yourself from other agents out there. Let's take a look at an example here that we just sold this case here in the office just about a week and a half ago. And we had a family of 4 children, 37, 36, 33, and 31. And they bought life insurance on their father. Father was 60 years old. And we did a face amount, in this case, of $500,000. Each child was responsible for 1/4 of the premium, so $206.31 per child per month. And each child is going to receive 1/4 of that death benefit, $125,000 tax-free, guaranteed no matter what. What a perfect investment vehicle when you think about investing into something. You know what your end amount is day one, no matter what. There's no other investment vehicle out there that can guarantee you that. And it's tax-free. And let's just, what I did is I played out the scenario over 5, 10, and 20 years. You look at what each child would pay in. In 5 years, they paid in just over $12,000 and got over 10 times the return on their money if the father passed away. You look at it on a 10-year basis, they paid in just under $25,000, and they got 5 times return on their money. And then on a 20-year basis, put in just under $50,000 and almost 2.5 times return on their money. So looks like a pretty good deal to me. You've got anything to add on that example, Jason?
Well, the beauty of this is, it's conceptual selling. So there's a couple things to remember here. Is first off, when you do the math, you're looking at over $800 per month of brand new life insurance premium that you're not replacing anything that they already have. So when you're asking yourself, hey, how do I get to that next step in my career? It's conversations like this that help that guy do it. Because remember, this is a premium that's coming from that father. This is how you can get into that family. Now, what you do with those family members, the conversations you have from there, that's even more business. So it's all about conceptual conversations that's going to keep you separate from that next agent.
That's great, Jason. Let's move on to the next sales idea, and that's LTC Alternatives.
This has been the hottest topic that we've seen so far this year. I mean, it's really being widespread. Some of you that are maybe familiar with the true traditional long-term care landscape will really appreciate this, but there's a lot of changes going on right now. Now, I don't want to take away from that industry because definitely it's still just as important as it's always been, but this has been one way that you can use that life insurance as an alternative to long-term care. So looking at the bullet points, going down that list, the first one is it handles the most common objection to long-term care, which is I just don't want to pay those premiums not knowing if I'm ever going to use that. I'd rather self-insure. Well, we hear that quite often. This makes it to where there's not a use it or lose it behind this. So your clients either are going to pay that premium and protect wealth, or they're going to drive wealth forward and pass it on to their next generation. Gives your clients the either-or approach. So, you can use these concepts in those meetings in a situation where now you can show the traditional LTC plan alongside the life plan, where maybe the premium's a little higher, but there's different values in each plan where your clients can pick either or versus yes or no. Giving your clients flexibility. This really is a very good topic because there's a lot of different ways we're talking about when we're talking about flexibility. We can use this on a universal life chassis. We can also do it on term, whole life. So whether we're wanting to dial in how many years of payments or how many years of protection we want, or if maybe we want cash value, we're wanting to take some income, things like that. A lot of different options you can do.
Hey, Jason, one thing I want to talk about real quickly when you say gives clients flexibility is, that common objection for long-term care is somebody saying, hey, I'm going to self-insure. Well, why don't we give them the flexibility to self-insure through a life policy that can leverage those funds from, a small dollar amount to a large dollar amount?
That's exactly it. Whose money would you rather use, yours or someone else's? That's perfect. Going right into it, does not require additional licensing or CE credits. This has been really popular with a lot of agents, especially for some of you that maybe haven't went through the certification to sell traditional long-term care. Maybe that's not your key market. Maybe you don't write that product quite a bit. One reason that you definitely have is maybe your clients aren't as affluent, where you'd be mentioning that quite a bit. So you wouldn't need that for a lot of the products that we're talking about today. no receipts or proof of care needed. A lot of these products are based off of the loss of 2 or more ADLs, or activity of daily living, such as bathing, eating, toileting, transferring, walking, and dressing, things like that. So as long as your physician, your client's physician, can say they can't trigger, they can't do 2 or basically lost 2 or more of those ADLs, you'd be able to trigger it and get a cash benefit. The last one here has been a very popular reason to use life, is it does not require the insured to receive care from a licensed caretaker. So it can be somebody, maybe a situation where they want to move a loved one in, or maybe they just need to hire somebody part-time to give that spouse a little freedom and their flexibility. There's a lot of different ways that you can do this.
Why don't we take a look at a couple of examples here, Jason, and I'll set this illustration up. Is in this situation, we're looking at a 40-year-old, and all 3 of the examples we're going to show you, premium's going to be paid until age 83, and then they're going to go to a nursing home or a home health care situation and start receiving benefit.
And that's really what you're going to see as an average case. I mean, that's what people want to know. That's when they're probably going to start receiving that care. But what we'll do is we'll kind of explain this first scenario and then just show you a couple more as it, just to show you that it's a very good option in a lot of age groups. But this case here is based off of just a little over $2,200 per year. Now, when we did the research, we compared this to a reputable company serving long-term care. That premium was right around $1,560. So very close. You're looking at just a little over, just right around that $500 to $600 a year difference at this age group here. But there's a couple key differences. First off, no user loses. So either you're going to have a $250,000 worth of pool of assets to drive forward, or your family's going to have that tax-free death benefit when you pass on. Another key feature to notice here, too, is remember that $2,243 a year premium is locked in and guaranteed for the life of the client. Big difference with that compared to long-term care is a lot of you that have written that type of plans know a lot of people are getting rate increases right now, so you won't have to have that conversation with your clients.
Well, let's take a look at the next example, and we're talking about a 50-year-old, and same situation, paying premiums to age 83, and then going into a situation where they need to start receiving benefit.
And the same story here at age 50. I mean, you're looking at $3,463 a year for life. We shopped it out, compared it to LTC. You're looking at right around $1,750 a year. So now with those same key bullet points you're seeing, there's a lot of ways you can justify that extra premium, which would lead to extra commission.
And then the last example we're looking at a 60-year-old, and once again paid into age 83 and then having to receive benefit.
That's beautiful. And one point here to make is that the total premiums paid to age 82 when the client's getting ready to receive care is about $130,000.
Now, is that on the 60-year-old?
That's on the 60-year-old. So the total premiums paid in is at $130,000. You're right at the end of your life expectancy. As you can see here, we could even keep going and still not exhaust the leverage that we're having here. So there's a lot of value even at these older ages.
Yeah, and what was the traditional premium?
Right around $28.36 is what we came up with when we shopped it out.
LTC was $28.36, and you're looking at a little bit higher premium here for this alternative plan, but then you look at what type of leverage you have, and you know you're going to receive benefit either or. It's, in my opinion, probably a story that gives a lot more peace of mind.
Especially for when you have that conversation with those that maybe are already affluent and they want to keep this money in their families. That's really where this is going to be a big deal. Farmers, that's going to be a huge, if you have anybody that's farmers or in that small business owners, they want to keep that money in the family, great conversation piece.
The other thing I just thought of, Jason, is what about underwriting? Is it a lot easier on these LTC hybrid type products like LTC combos? Tell me.
That's an excellent point. Not only is it easier in most cases, but it's different. Remember, on life insurance, in most cases, if it's a built-in rider like you're looking at here today, we're not underwriting this based on a long-term care claim. We're basing this on whether it's going to the client's going to die or not from this. So with that in mind, that changes some of the rules. For more of the questions on that, make sure you give us a call. We'll go over that with you to kind of give you some more details on that.
Okay. Well, let's touch on the last sales idea we're going to hear. And that's breathe life back into your annuity. Now, where this is going to come into play is you're looking at annuity clients out there. And a lot of annuity clients out there are sitting in a low current rate environment, and they've got an underperforming annuity. And a lot of the traditional approach out there that these these clients is, hey, let's take it from annuity A and put it in annuity B. We'll give you a bonus, and then the potential for a better rate of return. And, you know, you're almost taking them from annuity A to annuity B, which is the same apple, just a different packaging. So, you know, and people that have annuities, as Limra has stated in the past, majority, almost 80 to 90% of them, aren't using those annuities for income. So as I state here in the slide, goals change. Well, if the goals have changed and they no longer need that for income, as we know, annuities are great products for wealth accumulation and wealth distribution, just not great products for wealth transfer. So let's breathe life back in that annuity, and let's take a look at an example on how to do that. Example one, we're looking at 59.5 or older clients. Let's got a client that's got $100,000, 6% surrender charge. So we're looking at surrendering the policy. We're going to give up $6,000. But you take that $94,000 left over, and you can leverage that into a $250,000 benefit. Now, the question that I've got to propose to you as an agent and meeting with the client is, does that make sense to the client from a suitability standpoint? This has got to be money that they're not going to be touching anymore, because we're leveraging it on a tax-free basis to hand down to the beneficiary. So that's a conversation for you and the client if this makes sense from a suitability standpoint. But let's expand on that story a little bit more. $6,000 in surrender charges creates a future value of $250,000. You look at a 5-year rate of return on that, 21.61%. You look at a 10-year rate of return, over 10% rate of return. And remember, this is a tax-free death benefit. So if you're looking at any other product out there, you're going to have to look at an after-tax return, not a before-tax rate of return. Does that make sense, Jason?
That's perfect. And then this all ties in all together, really, when you look at it. Not only that, you're not going to find these kind of rates of return anywhere else. And another part of this conversation that's just kind of hidden right in is, remember, we can get some of these new benefits tied in with that death benefit. So now you're adding more benefit and value to something they never would have had with that annuity.
Let's take a look at one more example, and I'll set this up for you, Jason. We're looking at a client that's under 59.5. Now, I'm going to start right where you might be thinking, and that's the 10% excise tax penalty. Yes, that's going to happen if we're going to surrender annuity pre-59.5. But let's play out the situation and see if it makes sense.
That's exactly it. And when you look at this, remember, every client's goals are going to be different. So, you know, there's not a cookie cutter for everyone. But in this case, we had a client under 59.5 with a $100,000 annuity, same as in the example one. But now we have that government penalty, that 10% excise, bringing us to a total of cash that we can use of $84,600. The same $250,000 benefit. Really, one thing you're going to notice as an overall theme before we jump into that next slide is that really these ideas tie together. The investing back into your family is a great way where you'll find some of that kind of money. Same thing goes right into that traditional, different approach to traditional long-term care. It's the same, really that same story. But when you go to the next slide here, you'll see that for that $15,400 in charges, well, what is that giving your client? Well, it creates a $250,000 future value. Those numbers stack up at $84,600 can equal $250,000 of future value with a 5-year rate of return of 24.2% and a 10-year rate of return of 11.44%. Now, that translates to that, remember that saying, that $250,000 benefit. A lot of times, in fact, these scenarios, we can also tie in some additional benefits that they can use during their lifetime as well. And again, last but not least, if nothing else changes with that, tax-free death benefit guaranteed to pass on to your loved ones.
Well, that's an unbelievable story, Jason. Why don't we take overview of the life division and some of the opportunities that we're offering agents right now, just before we wrap up. One thing that I want to touch on that's really hot right now is the Premier Loyalty Rewards Program. It's the most aggressive agent incentive program on the market. I don't know of another program out there that's uncapped. And I mean uncapped, meaning you can earn limitless amount of cash for your production with Premier. On top of that, we do a 5-day, 4-night trip every year, qualifications, not as much as most companies. How about that? I'd say you compare it to other carriers, we're cutting it in half. So call them like marketer, find out what you would need to do a target premium to qualify for our trip. Other things that we're offering to our agents, just for being appointed, we're offering a proprietary software, X-Ray. It's a $4,000 value. It's a software program to help you quote your clients right the first time. It really gives you insight into the questions and the things that the underwriter is going to know about specific medical conditions. I believe there's over
550 questions built right in.
Right in. Okay, great. And so it really gives you the opportunity to quote a client right the first time and never have to go back to a client and say, look, you know, this is actually going to cost you a little bit more money. I don't know how many times people have saved the case where, you know, they've quoted wrong up front and you had to go back to the client. So we've seen a significant increase in our placement ratio because of this. Using it here for agents, it'd be even a better opportunity for you to have it at your fingertips. We've got a term quote engine, universal life quote engine on our website under our life tools. We've got our webpage link right up there. Take a look at that. We've also got an underwriter on staff. He has 17 years of head underwriting experience at Indianapolis Life. He gives us some tremendous insight on tough cases, so that also helps us with our placement ratio. And we've got illustration support on staff. We've got full-time person that all that person does is illustration all day. So we're not alike some of those bigger carriers out there, bigger FMOs, where you may have to wait 48 hours to 72 hours for a quote. A lot of times you're getting it back within 24 hours.
That's exactly it. Just to expand on that, man, Premier has really invested a lot of money to make your life easy between underwriting, quoting. We also have almost all of our carriers are available for appointment right online, so that way you're not printing off a ton of forms and spending your days doing that. Going right into this, though, most of the time when an agent asks me, what is it that takes you to that next level as far as business, and what are the guys that are making $250,000 of activity doing, and really it comes down to 3 key points. First one, of course, number one is activity, how many people you're talking to. But the next thing is understanding where these opportunities are, which we went over today. The third we've really taken a lot of time to go into, too, and that's niche marketing, getting your story behind what are you doing to get in front of new clients on something besides product. So give us a call if you're interested in that. Social Security planning has been very hot. We're also working with a company that's really keying in on communication marketing with Wealth and Wisdom, having a lot of success, changing the way agents are doing business there. Also, we've got some for those of you in the business that are working with business owners. We worked on kind of a key system there that's getting in front of a lot of prospects there. So a lot of exciting things happening.
Well, if you have any questions or want to talk about any clients that might have come to mind during this presentation, you've got our number on the screen at 800-365-8208. Just ask for a life marketer. We want to, once again, thank you for your time and hope that we've given you at least one idea that you can go take out to the field today.
Thank you, everyone, and we appreciate the opportunity to earn your business. Have a great day.
Thanks, everyone.